I want to go over a trade I made today in my live account in CREE. What we starting here, I want to start with the weekly chart. As you see on the screen, I've gone ahead and drawn in some trend lines that I was using. As I said in my trend line video, I really don't use trend lines all the time. I've started adding them into some of these trades so I can give you an idea how they work. And in case you want to use them, I've got a video on how I set up my trend lines below in the description, as well as the rest of my indicators that I use. But as you see, I've gone ahead and drawn in some trend lines here that I would think are relevant in this trade. I was looking for a stock. I was using some of my scans to try to find a stock that would make a good covered call position. And I came across CREE, and I like it overall. I'm going to go over a couple of the different things about it right here. Like I said, this is the weekly, so I'm going to go down to the daily chart. The only real negative that I saw as I looked at this stock is it's up toward the top of this trend line. It just bounced off of it. It's coming down. You know, ideally, if I'm going to do a covered call, I would like for it to be in this area moving back up. But what I did was I adjusted my strike on the covered call to kind of make up for that and to give me some protection, you know, down in this area. So let's go to my next set of indicators that I use. Now this is my EMA wave. Again, the instructions are below on how to set that up. It's also got an RSI indicator. RSI is pretty good. It's between 70 and 30. It's come back into this mid zone of the wave, which, you know, ideally, again, right here would be the buy point I'd be looking at. I went in and got in, you know, I actually got in at 49.35, which was a little bit toward the high of the day. But it's still not, it's not, looking at the EMA wave, you got an uptrend starting. It's in this wave that I like to see. So it's really not too bad of an entry. Yes, this would have been a little better, but on a covered call, there are ways you can allow for that. These are the Bollinger Bands. You know, this is probably the biggest negative on this trade. I'm at a 1 ATR over the mean on my Bollinger Band. You know, that could be a buy zone. You know, it's coming off the 2 ATR and even almost a 3 ATR here. Again, ideally, I'd like to be more in this area, but I did adjust for that when I picked the call that I sold against my long stock. Another thing, if you notice, the Bollinger Bands are widening. That gives you an idea that probably implied volatility is beginning to go up. That can be very helpful when it comes to selling a covered call, when it comes to selling your short position. I like to see a little bit higher implied volatility when I'm selling calls so I can bring in more premium. So what I did is I actually started out by trying to sell the call. So I picked the call that I wanted to sell before I even bought the stock. So I wanted to make sure I could sell it at the point that I wanted it. Let's go ahead and switch over to this screen. And I sold the next week's call. And I decided, because it wasn't a perfect entry, that I was going to sell the 48.50 call. And I was able to bring in a credit of about $1.55 for that. So after I sold that for $1.55, then I went ahead and bought the stock. I was able to buy the stock at $49.35. So what that means is that if this is what I use to calculate my trades. This is actually my trade journal that I use, and of course feel free to copy it. I think it's the first time I've shown it on the site. But basically, I sold the call first, and then I bought the stock here. I only did one contract. I did do it in my live account, although I show the example on the simulated account. If this stock stays above 48.50, then basically what is going to happen is this will get called away from me at 48.50. And with a new commission structure, I don't have to pay anything for that. So I'll get 48.50 for the position, which is only a $69 profit. However, that is 1.45%. Now, if this gets called away next week, that would be a 75% annual return on this position, which is really good. Now, I probably wouldn't let it get called away. I'd probably roll it out and try to get some more time value. I'll just have to look at the numbers and where it was at. But let's look at the stock again, and or look at the chart again and get an idea of what we're talking about, where my stop would be on this. And let's go back to this one. Zoom in a little bit. Right now, the stop that I have for myself is about right in this area. So if this should trade down to this level, then I would close this position and take whatever loss or gain there was, which at this position there would be a loss. Like I said, I've got 40. I got a dollar 55 for the call, so I purchased it at 49.35 or $1.55 for the call. So my break even is actually at about 47.80. So my break even, is right in this area. But I wouldn't really be looking to close the position to about right here, because even if it finishes in here, it just means that my 48.50 call is going to finish out of the money and worthless. But I own the stock, so I could just simply resell another call, and resell another call. You could make the argument that as long as you're above this trend line, that you would be good to try to continue to stay in the position. I would not do that. Again, I would probably get out right in here because of what I'm trying to make on covered calls and even diagonals. It's really not worth it to me to get too negative on any one trade unless it's a stock that I just really want to own long term. Uh, there is a good possibility that it will pull back more into this area, and it will probably get below. I would think it'd be right in this area, so it's going to come down to as far as closes. Now, you might get a wick that comes below, but then I'd wait and see what's going to happen. The other thing that could change my mind would be if it were the market itself were to start down and the market were to start to collapse. Then I'd really have to take a strong look at this. But if I can clear 1.5% in a week, again, as you annualize that on a relatively safe trade, because let's look at the percentages on this using the TD Ameritrade risk profile. I'm on 11.15. The gray area is the likely range that this position would finish in based on its current volatility and its current movement. So there's really a 70% chance that it's going to finish above my break even of 47.80. That's pretty good. So I would be willing to hold again down into this area, which I would have a loss, of 100. According to this, I have a loss of $158 in this once I get to this area, or even this right in this area, maybe a $90 loss. So a $90 loss versus a potential $70 gain, not quite a 1-to-1, but I do have a 70% chance of it being successful. And I can always, as long as it doesn't move up too much, I can always roll the call and bring in some more time money next week, next Friday, next Thursday or Friday. And sometimes I'll roll these on Thursday or just depending on how the stock's moving. But so I could bring in even more money going forward, which would also move my break-even point down and enable me to continue to try to trade the stock, even perhaps between those weekly trend lines that we were showing. I think it's a pretty good entry on this stock. I feel pretty good about it. Ideally, I would rather it been right in this area. I was having trouble finding a trade I really liked. I ended up with 2 covered calls today that I entered into. I did not do a diagonal on this one, primarily because covered calls are easier to place than diagonals are, although your return on a diagonal would have been much better because instead of buying the stock, you would have bought a deep in the money call that expired maybe 90 days from now. But you would have tried to get it for as little time value as possible, so all you'd be buying is intrinsic value. You probably could have bought, a call in the $30 range for maybe 20 bucks. So that would have given you just a little bit of time value. And then your return on investment, you still would have made the same return on the call, but your investment, instead of being $4,700 or $4,800 on one contract, your investment only would have been about $2,000. So it would have doubled your return, and that's one thing I really like about diagonals. And they're just with the bid-ask spread. They're a little harder to get in and out of than covered calls. Sometimes I get lazy and just do the covered calls. But certainly, if you're willing to fight the bid-ask spreads, your return on investment is much higher on diagonal should you choose to go that way. If you want to know how to set up any of my indicators, I've got the instructions below in the comments. Show you how to do the EMA wave, the Bollinger Bands, and even give you an I'll even do a video on how I set up my trend lines. Probably redo that video later. It didn't turn out quite as well as I liked, but it does let you know what I look for in my trend lines. Please like this video. Please subscribe to the channel. Please check out the rest of my videos. And if you have any questions or comments, just let me know. Thanks.